The US bond market just closed February with a wave of bearish signals, suggesting that rates may remain under pressure in the weeks ahead. Yields are struggling to find support, while TLT continues to show signs of strength. But is this just a temporary move, or is it a larger shift underway? In today's update, we break down the US10Y 10-year and 20-year R yields confirming a broader decline. TLT Trends. Is the bond rally just getting started? 10-2-year spread. A warning signal for the economy? Canadian 5-year analysis. Is Canada's bonds market mirroring US weaknesses? With multiple bearish signals in place, the bond market is flashing a potential major shift in rates. Subscribe now for expert analysis, and let's dive into the charts. This is the candle map for US 10-year yield after the February closure. What we are seeing here, the daily broke through the 200 days moving average and shows the signs of continued move down. The weekly also formed a strong bearish candle, breaking through multiple support lines. The monthly formed a minimally accepted tower top, although it's not complete yet, but the chances for moving lower in February and the coming months are significant. And if we look at the 2 months closure, we are seeing a bearish engulfing here. So the next 2 months will likely be bearish. And speaking about the long-term perspective, these are not changed. And I'm talking about 3 months, like quarterly, semi-annual, and annual frames. They remain bullish. So there is a good chance that we are going to see 1 or 2 months of declines before the big rally restarts. But let's analyze it from multiple different angles. So what we are seeing here is potentially developing bullish flag for, I put this 20-year and 10-year side by side, so that we are seeing a very similar patterns here. So if this hypothesis confirms, then we are going to see a decline of 20-year yield toward 395, 379, and it's going to happen in the next months or 3. That's a target geometrical projection. Let's see how it develops here. So for the 10-year, it's a fairly similar formation. And if we look at the bigger picture, we are seeing, I'd like to remind, we are seeing a fairly clean impulse up. So from Elliott wave perspective, now we need to expect a consolidation. Perhaps it's going to be a bullish flag lasting for several months or quarters before resuming the rally. That's the Elliott wave perspective, just on top of bullish flag. Now let's move on to the bigger picture. This is the chart that we've been tracking since the end of 2022, and as I said, this was the original chart that we outlined, and it hasn't changed so since then. Wave 1 is complete. Now it's the bonds are developing wave 2 here. And if you look at the historical projection perspective, we can see that somewhat similar rate and rate stability was here during the wave 2, and these were years 1958, 1963. So this is a very similar period of time. So we might see an extended period of stabilized rates before they continue to move higher. If we look at the Canadian 5-year closure, what you're seeing here, this is the monthly candle. It's a doji, and it can become a reversal pattern here. So that's that's something to keep in mind, and potentially Canadian bond market could be forming a bottom. However, we need to monitor it. We'll see what would be the next rate decision at the Bank of Canada meeting on March 12th. And speaking about the longer term projection, this was our chart that we shared back in June 2024. So far, it is followed, and we are expecting rates to find some support here in the most typical Fibonacci at the most typical Fibonacci levels for wave B or 2. Well, that's the target for now. The chart remains unchanged. And now let's move on into TOT. Let's see what TOT candles are telling us. First of all, the daily looks healthy, and the chances for moving higher are fairly significant. If we look at the monthly closure, it's been a bullish candle closed above the major resistance, now support level, 8 months EMA. However, the bottom hasn't been confirmed yet, so we need to see another strong move by TOT in the coming months. For 2 months, it's a strong one. We have an inside up candle, and the chances for the next 2 months to be bullish are significant. What I would be looking for right now is the 10-day closure, which is happening on Monday, and that will be quite important. If we close above this level, which is 90.99, then this would be a nominal bottom, pardon. So 19.99 closure about here will have a bottom on the 10-day frame, and the chances for moving higher would be significant. So if we look at the bigger frame, so there is a possibility that TLT is forming a bearish flag here. So similar to what we just discussed for the yields, for 20 and 10-year yields. So this could be a bearish flag. If we see a strong move here and the reversal right somewhere in this rectangle, so let me add some targets here. So this is potential target for the current move, a reversal and a move towards lower lows. So far, this is aligned from geometrical and from classical pattern perspective. And now let's have a look at the current wave. We've been tracking this wave as a corrective, so I'm still hesitant to find any impulse in this wave. So it's a complex one, and I'm not sure there is a impulsive structure. It could be somewhat the motive one as a diagonal, but right now I'm hesitant. So, however, if it is considered as an impulse, then we might see something like this. So this would be an impulsive structure somewhere here, wave 3, 4, and wave 5 somewhere here, somewhere between 99 and 101, which would be aligned with this structure and for this type of wave. However, I'd like to emphasize this wave could be a diagonal and non-overlapping diagonal too. So this would be a stronger case. In this case, we would be looking for a stronger reversal. That's the perspective for TOT, and the final chart of this quick presentation, I would like to discuss the spread. So this is the 10-2-year spread, and I've been highlighting it multiple times already that the spread is moving down, especially in the kind of couple of last weeks, And now if it closed the month with a bearish candle after potential spinning top, and the chances for move lower in the next couple of months are fairly high. And if we look at a shorter frame, for example, this was the closure of on February 28th. The huge bearish move here, which technically invalidated multiple potential impulsive structures. Now the chances that this is a bearish consolidation wave, and we will be looking for a move down here, something like this. And obviously we would be looking for a lower low here. And this is the chart that we've been tracking for a while. The very important level is obviously 0 and minus 0.114. This would be a critical level. If it is crossed, then we would be looking for a prolonged move and exploration here in the negative area. That's the perspective for the spread. And now I'd like to summarize what you've seen. February's bearish closure in yield signals the rates may remain under pressure, reinforcing the potential for continued weakness in the bond market. TLT trends combined with signals from the 10-2-year spread suggest that a broader trend shift could be developing. We are at a critical juncture, and the next moves in yields and bonds will be essential in shaping market expectations. We'll be tracking every development closely. Don't miss out next update. Subscribe now for real-time bond market insights and Elliott wave forecasts. Follow us on Twitter, Telegram, and Reddit at Investing Angles. Check out our free reader subscription at investingangles.com for exclusive articles and premium insights. The bond market is setting up for the next big move. Stay ahead of the trend and see you at the next update. And as always, happy trading.